attendees and our speakers, kindly remember to put your mobile phones on silent mode. Also, please mark the fire exits around you. And of course, today we will be taking questions through Slido. So just a reminder to watch out for the QR code that Eagle or Groww. Just as Lalit makes his way up to stage, Lalit, come on, we'll grab a mic for you. Can we have a mic on stage, please? Can we have a better reception for Lalit, please?
Hello, is it working? Thank you so much for coming here today. It means so much to us. Saturday morning, seeing so much energy. Thank you so much. I'll just quickly kind of. By the way, we started in 2016, and because we are all investors here and we love numbers, so let me start by asking very simple kind of questions. Do you know what was our mutual fund AUM in 2016, 10 years back? Anyone? Sorry? It was around 12 lakh crore. Do you know what is now? It is, exactly, more than 80 lakh crores. Do you know what was our SIP book 10 years back? SIP book is basically the amount of money that flows every month through SIPs. It used to be around 3,000 crore. Do you know what it is today? Yeah? So it's more than 10x, right? So, let's celebrate that kind of, the mindset has changed. So now we think about wealth. We think about building for future and so on, right? Apart from this, what we have also seen is how the ecosystem has changed. So when, like 10 years back, who used to talk about building wealth, right? So and today, like three fundamental big changes have happened. One is like a lot of young folks have come into the markets, right? So which is like, and I can see here like a lot of, because India is young, it's the base effect, right? Itself takes care of the fact that many young investors are coming into the market. Second is how the geographical changes have happened. Earlier, people who had access to markets were like, or mutual funds were like in tier 1 cities, Bombay, Bangalore. We are lucky we are in Mumbai today. But now you see customers coming from tier 2, tier 3 cities. A lot of customers, a lot of investors from Uttar Pradesh, Bihar, Northeast, Northern India, Eastern. So across the length and breadth of the country, we have now investors. And third, very interesting change has been the rise of women investors. Now almost 1 out of 4 investors are around that, women investors are coming to the market. So that's crazy level of maturity overall of markets in just 10 years. This was about the markets, but then I want to move to Groww, right? So we are very grateful being at the right time for the right opportunity to serve our customers, and somehow we are lucky, right? We participated in this growth story and we contributed through our own ways in growth of overall this story, and we will continue doing that. And like you have seen the presentation before, how kind of slowly and steadily we have been building for our customers and growing with our customers. And for many more years will continue to do that, and we are really grateful for that. Last thing I want to talk about, now after 10 years, what we realized is that we also now we want to start contributing to the community, right? Outside, let's say, capital markets or outside mutual funds. So we started something called Groww Foundation. Groww Foundation is an org which wants to create impact in various areas, unlock the potential in our country in terms of skills or education or research and so on. And we have taken quite a lot of initiatives in last 1 year, and some of them I would love to kind of talk about. For example, we have Mumbai at IIT Bombay, we have kind of established a center where we will fund every year more than 100 teams who will come up with ideas in deep tech and so.
Curiosity kills the cat. So I wanted to know how the flat looks like. So I went in. That fellow, there was a fellow sitting there. So he showed me the flat. Thinking, and he wanted to test whether I'm going to buy or I'm doing time pass. So he asked me, sir, what do you do in your life, sir? Fortunately, he has not seen those deep fake videos. So I told him, I am in the area of finance. I manage some finance related work. He said, then why don't you give me some tips? I said, on what? Investment. I asked him, do you invest? He said, yes. Oh, what do you invest? He pulled out his mobile, he opened one of the apps and showed me his portfolio. Though I could not comment, they were very good stocks, all blue chips. He said, it is very good, you are having nice stocks. What do you want me to give as tips? No, sir, this is not sufficient. Why? My brother-in-law put 10,000 rupees and he is having 1 crore now. I asked him that. Crypto? I innocently asked him, what is crypto? That's all okay, sir. We don't have to know about it. You tell me how I can make from 10,000 rupees to 1 crore. I told him, what is difficult to believe, please don't believe. Correct? What is difficult to believe, don't believe. So what is your intention when you come into the market? You want to make a normal type of a gain over a period by a disciplined investment strategy so that your risk is minimal and you are able to grow your wealth, then you are in. If you want to overnight become Midas and touch everything and make it gold, do one thing, eat well and go to sleep and dream. It is certainly possible that you will become billionaire in half millisecond in your dream. In reality, it may not happen. In the process, because of your avariciousness.
Well, we know that our speakers are rock stars because they have been hounded and stopped by people who want to talk to them, and there will be opportunity to do that. Let's give them a huge round of applause as they walk up on stage. A very warm welcome to all three of you.
It had shrunk to about 15-20 till last week. It's fallen to zero. If the shortages continue, the Strait of Hormuz stays blocked, we are now hitting really serious trouble. So, European ATF inventories down 30% in the last 2 months. We're just about hitting the seasonal pickup in flights. Bunker fuel inventory in Singapore has been shrinking. If this doesn't end in the next another 2 weeks or so, we will start seeing massive cancellation. So the economic momentum has already, I think, weakened. It has been supported by some companies over-ordering because they are fearful that there will be shortages. So the industry activity has not slowed as fast as perhaps would have been expected. But I do think that we are weeks away from really hard shortages, which will have significantly negative impact on the global economy over the next 6 months.
Right, Sajid, how bad is bad? What are we looking at? Let's assume that, so this is a war. They're saying that it's something like a fishbone that President Trump has swallowed. It doesn't go down, it doesn't get out. He's stuck. So how bad is bad?
And I think it's first important to identify the nature of the shock, because it's different from the last oil shock we had in 22. That was a price shock. There was never a concern about the availability of products and crude, and we know how to deal with price shocks. The problem this time is that this is both price and quantity or lack of quantity. Now, why has the last month been better than we expected? We all thought if this goes on till the month of May, all hell is going to break loose. It hasn't in India and all of Asia. Why? There's a deceptive calm, and I think it's important to understand the numbers. There are about 13.5 million barrels that are offline. That is the largest oil shock in the history that we know. The reason that has not resulted in shortages is because there is about a 10 million barrel drawdown of inventories every day. So there's really no shortage that we're seeing, because the first response has been run inventories down. Now we know that's not a sustainable answer. You can do this for another 4 or 6 or 8 weeks, but at some point, inventories will hit their operational minimum, and then you'll actually see physical shortages. So there are two ways to respond to this. The first is to avoid shortages, because we learned from COVID that these things are non-linear. When a small business shuts down because of the lack of LNG or LPG, 2 months later, even when the supplies are restored, it doesn't open back up. That's a non-linearity. When a gig worker goes back home to their village, they don't come back. So the first order of business is, how do you hustle and get whatever is available? India has done a good job. We saw in March, we really ramped up our crude supplies from Russia, and in April, our LNG imports, which were constrained back in March, are almost back to pre-crisis levels. Now, this is beggar thy neighbor. Large countries like India can bid for this on the high sea. Who's getting really hit? It's the frontier markets, the Sri Lankas, the Pakistans, the Vietnams of this world. But this is bad in the following sense, that even if physical shortages don't manifest, there's a growing consensus now that crude prices are going to remain close to $100 a barrel for the next 4 quarters. So the quantity constraint goes away, the price headwinds remain with us for a long time. The last thing I'll say is this fishbone analogy is an interesting one. I think it's clear that the Americans miscalculated, and I think the off-ramp is a little bit challenging, because President Trump may well want a deal.
And because again a promoter group owned company, not the shareholders. So he tried to fulfill his dream at cost of shareholders and minority shareholders. So this is how the asset transfer happened, and direct funding has happened. So why this matters? Because we allocate capital to the company for the pharma business, not for the company.